Over the last few years, and especially this year, we've seen an increase in the number of multi-billionaires investing in or acquiring REITs, otherwise known as real estate investment trusts. Some of the richest people in the world have been praising these investments as being great buying opportunities. Today, we're going to take a look at why billionaires are investing in REITs and why you might also want to consider them for investing portfolios. But before we start the video, only a small percentage of people that watch our videos are actually subscribed. So, make sure to subscribe and leave a like if you do enjoy the video. Now without further ado, let's jump right in. Let's start with what REITs are. REITs, or real estate investment trusts, are companies that own income-producing real estate across a wide range of different property sectors. These companies have to meet a number of requirements to qualify as REITs, which include having to invest at least 75% of their total assets, the real estate, and having to pay out 90% of their taxable income to shareholders in the form of dividends each year. As a result, these companies pay much higher dividends than your typical dividend stock. It's not unusual to see these stock offer yields upwards of 4% or even higher, and some of them pay monthly dividends, as opposed to quarterly REITs that can choose to invest in a wide range of different property types or focus on certain types in particular. These would include office buildings, apartments, strip malls, warehouses, and hospitals. And because of this, REITs are often described as being the easiest way of adding real estate to your investing portfolio. Since you don't have to go through the hassle of buying properties, maintaining them, and then running them out yourself, these companies are traded on public exchanges so you can buy them just like you would with any other stock like Tesla or McDonald's, which makes them ideal for all types of stock market investors. In 2017, Warren Buffett invested $377 million into Store Capital, which was roughly 9.8% of this REIT's total shares outstanding. Historically speaking, Warren was never a big investor in REITs despite the asset class having been around since 1960. But there are a few reasons why he made the decision to buy in a Store Capital stock, as well as a few other REITs over the years. First off, Warren knows the role that dividends play in investing. It's estimated that over 90% of Berkshire Hathaway's holdings currently pay dividends, with some of them even offering yields of over 4%, including Ally Financial and Paramount. It's estimated that over the next 12 months, Berkshire will collect more than $6 billion alone in dividends from their holdings. Warren's definitely not shy. When it comes to his love of dividends, he's been investing in dividend stocks since the beginning of his resting career. And although he doesn't invest specifically for dividends, they are an important factor into how he decides what to invest in a stock's ability to pay out consistent dividends without much. Cut shows that a company has a lot of strength in both their financial performance and their management team's ability to run a company. Warren also invests in companies that he believes are undervalued and have a good moat around them so that other companies can easily copy them. It's for these reasons why he made the decision to invest in Store Capital, which is also one of my favorite REITs, although unfortunately, it was just announced that the company is being acquired and is scheduled to be delisted. A lesson we can take today from the most successful investor in history is that dividends are not pointless or inefficient. Like some investors, believe that compounding dividends are being reinvested and that they count for a large portion of a stock's total return over time. And it's for this reason that Warren loves dividend stocks, including real estate investment trusts. With so many successful investors pouring money into publicly traded real estate companies in recent years, I believe that everyone would be wise to look into REITs, whether or not they're currently a part of your own portfolio. It's definitely worth looking into these assets, whether you decide to make a small or significant portion of your portfolio available. We all know that REITs provide numerous advantages, and these REITs provide cash flow as well as their current discount and exposure. They provide real assets to the average investor. They're an excellent investment for anyone who's currently investing in stocks, but as always, do your own research and due diligence before investing in any of these companies. So with all that, thank you all so much for watching, and make sure you check out our other videos. We'll see you again next time. Bye!